Now, to discuss Bitcoin and more is Chris Matta, president of 3iQ Digital Assets, Canada's largest Bitcoin and digital asset fund manager. Hello, Chris. Thanks for joining us. So we did see Bitcoin fall during the U.S. American Thanksgiving holidays. Now a big rebound in the crypto market. So what is going on here?
Firstly, thanks again for having me. I think you touched on it a little bit earlier. Obviously, Bitcoin historically has traded alongside other risk assets, and as there were concerns around, a new COVID variant, Bitcoin, along with oil and equities, sold off right alongside them. I think this is a little bit different than the last time. Leverage in the system is not nearly as high as it was back when the original COVID scare occurred, March 2020, when we saw 50 to 70% pullbacks. But at this stage, I think this is a blip on the radar on the long term story of Bitcoin, and the broader macro environment continues to look really, really strong and positive for Bitcoin.
Do we have any idea of the sell-off? Was that driven by retail or an institutional, and this subsequent buyback? Who is behind that purchasing?
Yeah, it's hard to say. There's a lot of short-term traders in the space, and so you can look at certain on-chain analytics that can help give you some ideas of who's trading this. I would say a lot of the short-term traders are the ones that move in and out of this. That includes some retail individuals, but also proprietary trading desks and institutional hedge funds that are trading around macro news. And obviously, any news around new COVID variants provides some sort of scare, and so highly volatile assets like Bitcoin sell off even more aggressively, especially because of the embedded leverage that's inherent in the system. So it's hard to pinpoint it exactly, but it was likely more short-term trader focused, right? When you look at the on-chain analytics around long-term holders and whales, they continue to be relatively strong.
And 3iQ is behind the Bitcoin ETF, one of the few in North America, but this one is traded in Canada specifically. What are the volumes you're seeing in physical Bitcoin ETFs these days?
Yeah, so as you mentioned, 3iQ actually launched the first physical Bitcoin exchange traded products in Canada back in 2020 and remains the largest digital asset manager in Canada. We've continued to see substantial inflows into exchange traded products, not only our own, but globally. In the past week, there was over $300 million of new flows across all.
We have a chart on
Bitcoin
that,
exchange traded products.
The flows of assets. Maybe we can bring that up.
Yeah, absolutely. So the majority of that you can see here, and this is from our partner firm, CoinShares. The majority of those flows are into Bitcoin exchange traded products, but we've also seen it across Ethereum, Solana, multi-asset funds. And that has continued not only over the past week, but over the past several months. We've seen really, really strong flows. Of course, a big part of that is the new Bitcoin ETF that's in the US, the ProShares Bitcoin ETF. But in Canada, we've continued to see really strong flows, especially from institutional investors that are looking to be more active in the space.
Has the U.S. Bitcoin futures ETFs impacted interest and or demand in the Canadian physical Bitcoin ETFs?
Yeah, that's a really fascinating question. And actually it has, but it's not exactly how you would think. So a lot of people before the futures ETF was launched in the U.S. thought that they may take away from a lot of the interest in the ETFs that are in Canada, because now, of course, you have an ETF that's available in the US. But actually, the Canadian ETFs are physically backed ETFs, right? Which is something that has been long desired in the US, but the regulators are not currently comfortable with a physically backed product in the US. So actually, it's, I think, to help educate both investors in the US and Canada, internationally, about really understanding how these products are structured and why it's important that a futures-backed ETF may drastically underperform the underlier, right? Bitcoin futures, the roll cost on an annualized basis is going to be somewhere between 5 to 15%, which will result in underperformance relative to the underlier, while the Canadian ETFs are physically backed and will track Bitcoin much, much more closely. And so actually, it's resulted in, I think, additional interest in other types of ETFs that are backed by physical Bitcoin and may track more closely to the underlier.
So the argument by the SEC is that Bitcoin futures are regulated by the CME, and so perhaps there may be less exposure to market manipulation in the Bitcoin networks. Do you see any difference? Is that the case with Bitcoin futures and the difference between physical Bitcoin ETFs? Or, on the other side, many folks say you're just paying a big premium for those Bitcoin futures ETFs, that contango premium. And with Bitcoin, the physical Bitcoin ETF, it would have a more direct tracking of Bitcoin, which would be just a better product.
So the regulators are concerned around market manipulation, as you mentioned, and in their view, or at least what they've cited thus far, is that approving a futures-backed ETF, which has regulatory oversight by the CFTC, who oversees the CME Bitcoin futures products, that gives a more comfort around the price discovery process for the futures. Now, I think the thought process is, it's understandable from a political standpoint to want to have additional protection around approving an ETF, but I think the reality is, the price discovery process for Bitcoin is influenced by not only, the Bitcoin futures market, but obviously also heavily influenced from the spot markets that are traded on exchanges like Coinbase and Kraken in the US and a variety of exchanges offshore. So that process, that price discovery process, is circular, where these physical crypto exchanges are influencing the price of the futures, which then also influence the price of the underlier. And so I don't think approving a futures-based ETF necessarily completely solves the regulators' concerns around market manipulation. I think if they're concerned about that, that still would obviously exist because the underlying crypto exchanges influence the price of Bitcoin. However, in their view, it's kind of a stepping stone before they're comfortable approving a physically backed ETF, which they're looking for additional regulatory oversight of physical crypto exchanges through surveillance sharing agreements, where these crypto exchanges would have to be able to provide information directly to regulators and the exchanges around who's trading the actual underliers, their KYC, AML information, et cetera, which is very challenging to accomplish currently, but is a long-term goal for the space to achieve.
All right. MicroStrategy is also buying up more Bitcoin 7,000 in their fiscal fourth quarter. They have 120,000, over 120,000 Bitcoins worth about $3.6 billion. So are they a de facto Bitcoin ETF?
So this has been the case for a long time, right? Everyone has been trying to find a product that gets them, crypto or Bitcoin exposure. And historically, there's been a variety of proxies, from closed-end funds that are traded over the counter to, MicroStrategy back in the day, Overstock, which accepted Bitcoin on their platform and invested in other Bitcoin projects, was another proxy. I think today, obviously, they look and feel much more like a Bitcoin proxy. But at the same time, there's so many ways to get exposure to Bitcoin and crypto assets, right? The institutional adoption has increased dramatically. You have exchange-traded products in a variety of jurisdictions and a variety of different flavors. Bitcoin is now integrated for purchasing on a variety of different platforms, from Robinhood to Square to PayPal. And you're constantly seeing new financial products come to market, like blockchain ETFs, right? Even all the way back to 2017, folks like Amplify ETFs and BLOK, or other ETFs that are out there that have been launched more recently that hold Bitcoin, or other mining firms or publicly traded companies that are in the crypto ecosystem, like Coinbase and Galaxy Digital and CoinShares. And so the space is so much more robust today and more integrated into traditional financial markets that it's a lot easier to get exposure than it was, 4 years ago. And MicroStrategy is just one of the many options now for investors.
All right, Chris, we got to wrap it there, but quickly, any price prediction for Bitcoin end of year?
I can't make price predictions on a short-term basis, unfortunately, but what I will say on a long-term view, I think the macro indicators for Bitcoin and crypto assets more generally are hugely positive, and you're going to see Bitcoin continue to rise as part of that.